What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about the spot price of silver climbing up to and above the $26 an ounce mark, as well as the spot price of gold climbing up to and above the $2,000 an ounce mark. Meanwhile, everything else seems to be crashing. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, come and join us in the Precious Metals VIP Club, and of course, go and get your 5 free stocks by downloading Webull and funding your account. Everything will be linked in the description. So today is Tuesday, March 8th, 2022. The current spot price of silver, as I'm filming the video, is $26.27. It's up 62 cents, or up 2.42%. Big green day for silver. And the spot price of gold is $2,017.40. It's up $18.80, or up 0.94%. Pretty nice green day for gold as well. And of course, the gold to silver ratio is in the 76 to 78 to 1 range. But of course, that's as I'm filming the video at like 10 o'clock in the morning, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. All right, so in today's video, we're going to be talking quite a bit about silver and gold. I'm pretty excited about this one today, but before we can even get into the money, I think we need to first talk about the currency. More specifically, pretty much everything besides silver and gold, because it seems like everything is crashing right now. All right, so first things first, being that it is March 8th, that means we are now only 2 days away from the release of the February inflation report, which means we're all most likely 48 hours away from a heart attack, because I don't think it's going to be looking too good. Obviously, no one knows how good or bad it's going to be until the release, but personally, I'm assuming it'll be probably somewhere in the 8 to 8.5% range. And I haven't even looked at any of the expectations, so I don't know what anyone else is saying. I don't know who's saying what. I have no idea what's going on with expectations. That's just the number that I'm expecting. That's just my own expectation based on what we already know. The fact that in February, the Fed wasn't done tapering, rates hadn't been hiked yet, people were still spending crazy amounts of money, we were still going through supply chain constraints, and of course, the war between Russia and Ukraine. Now, of course, at this point on March 8th, all of those factors are still going on. Those are all still relevant, and most of them will continue to be, at least up until next week. The taper is coming to an end. Rates will start to be hiked starting March 16th. People are still spending crazy amounts of money. We still have supply chain bottlenecks, and the war between Russia and Ukraine continues. But at this point, oil is now skyrocketing, and we're seeing a wage price spiral. So God only knows what the next inflation report is going to look like. The March inflation report that gets released in April. But let's not get ahead of ourselves. Let's not worry about that just yet. Right now, our attention needs to be on the data being released on Thursday. This is going to be a massive catalyst ahead of the Federal Reserve meeting next week, because at the moment, the Federal Reserve intends to stick to the game plan and remain as predictable as possible to avoid market shocks. But that's not stopping the markets from pricing in worst case scenarios right now. Lately, the markets have been reacting in a way that just screams fear of inflation getting worse. Not to mention, when rates start going up, that's inevitably going to slow growth, which the markets are never fond of. And a war going on doesn't help much either. Point being is that there's a lot on the table right now. We're going through a lot, and we're being hit from all angles. And right now, we see far more people selling than buying. Hence all the red we've been seeing. I mean, In yesterday's video, I mentioned that the market opened pretty red, but that was filmed in the morning. By the time the market closed, we saw the S&P, the Dow Jones, and the NASDAQ all down between 2.3 and 3.6%. A massive red day. Not looking good right now. And the digital currencies have been doing even worse. Year to date, Bitcoin is down almost 19%, and Ethereum year to date is down almost 32%. Long story short, everything is getting slaughtered right now. But not silver and not gold. Now, before we get into the silver and the gold, I want to talk about one other thing. Real estate is doing pretty good right now, as it's been for a while, but we've been seeing since last year, homes are selling for like 10, 20% more than they're even worth. And I believe, and I've been saying this for a while now, I believe real estate is next in line to get smacked. And I've been saying this for a while, and I still stand by that. I do believe that's going to be the case. It seems as though real estate, a lot of real estate right now, is overvalued. And with rates about to get hiked up, I'm going to be very curious to see the reaction to that when it comes to real estate, that is. I believe real estate is going to get smacked, especially once rates get bumped up, but time will tell. But long story short is that right now it seems as though everything is getting smacked. Everything is getting butchered, but not silver and gold. I just showed the year-to-date charts for the two big cryptos. They're getting smacked around. Stock market today, for example, let's take a quick look at how the stock market is reacting today. We have the S&P 500 down 0.14%. We have the Dow Jones down 0.07%. We have the NASDAQ down 0.25%. Red across the board. Not the reddest of red days. We're just a hair in the red. But again, I'm filming this video at like 10 o'clock in the morning. God only knows how deep the market is going to fall throughout the course of the day, or if we're going to pop back up and start moving in an upward direction. Time will tell. But it's going to be very interesting to watch. It's going to be very interesting to observe. If you are not interested in the stock market, I fully believe you should be paying attention anyway. I think you should be paying attention to all of the markets. I think you should be paying attention to the precious metals. You should be paying attention to real estate. You should be paying attention to the stock market. You should be paying attention to what businesses are doing well, what types of businesses are not doing well right now. And I think you should probably also be paying attention to the digital currencies as well. I think you should pay attention to all of the markets, because oftentimes, if you study them all, even if you're not affiliated with them all, if you study them all and pay attention to them all, it can be a little bit of a cheat code. It's almost like a life hack. If you pay attention to all of them, you can stay sometimes multiple steps ahead of the game. And you can take action before everybody else jumps on board after the momentum has already started, whether it's moving in an upward direction or a downward direction. And now finally, before we move on to the silver and the gold, since we're talking about the stock market, just as a friendly reminder to go and get your 5 free stocks by downloading Webull and funding your account. Usually it's 2 free stocks. They bumped it up to 5 just for the next couple of days, so capitalize on that while you can. If you refer 1 friend by March 15th, Webull will give you 10 free stocks for the referral. And if you refer 3 friends by the end of the month, they will give you a spin on the Webull wheel, which guarantees you at least 1 free share of Apple with the chance of winning 2, 3, 5, 7, maybe even 10 free shares of Apple. This is a huge promo going on right now. Don't pass up on an opportunity. Webull link in the description. Time is running out. But now, moving away from stocks, moving away from the Federal Reserve, moving away from real estate and the digital currencies, moving away from all of that, let's now talk about the silver and the gold. So sitting here in front of me, you can see we have a nice little selection. We have some miscellaneous coins up there at the top. Type 1, Type 2, Silver Eagle, Canadian Maple Leaf, Australian Kangaroo. We have the Creatures of the North, the Kraken and the Werewolf. We have some more miscellaneous coins over here. We have silver bars over to the side and at the bottom. We have the 25th and the 30th anniversary maple leaf. And of course we have some fractional gold right down there. 10th ounce Krugerrand, Eagle, Maple, Britannia, Philharmonic, and a 1/4 ounce Philharmonic. And over here also have a 10th ounce Kookaburra, except this one's just in a pretty odd sized capsule, so it never really fits where I want it to sit on screen, so I always keep that to the side. But either way, silver and gold are having a fantastic day today. In fact, they've been having a fantastic last couple of weeks, but today especially, wow, silver up over 2%. I mean, right now, silver's up almost 2.5%. I think it was 2.4%. Gold is up almost 1% today. The precious metals are doing very, very well. And I personally believe this just goes to show that silver and gold typically, not always, but typically thrive in chaos. I think chaos is a pretty good word to sum up everything that we've been going through for the last 2 years at this point. Yeah, March of 2020. It's been 2 years. Even more so the last 1 year, and even more so the last 2 months. It's gotten more and more chaotic. And with silver and gold typically, not always, but typically thriving during chaos, this just highlights that. Because we have so much going on right now, as I explained in the earlier part of the video, as I've made separate videos about over the last couple of weeks. Inflation through the roof, the next inflation report coming out in 48 hours, tapering coming to an end, rate hikes about to happen in a week, war, all of these different issues that are going on right now play a role in silver and gold's performance. Now, it's not the only thing that plays a role in silver and gold's performance. It's also the health and well-being of the dollar bill and also other currencies around the world. The general state of our economy and the general state of other economies around the world, that plays a role. The industrial uses for silver and gold, the precious metals, that plays a role. The paper market plays a role. Everything plays a role. See, a lot of people think when this one little thing happens, it should drive the spot price of silver up or down. And a lot of the time, nothing happens at all. And people are like, hey, what's going on? This happened and it didn't automatically make silver move. That's not how it works. Silver's affected by so many different things. And right now, we're going through more negatives than positives. So a lot of the time, we're going through negatives and positives simultaneously. So it kind of pulling silver up and down at the same time, which just kind of leaves silver and gold kind of like in limbo. It just kind of moves sideways because good things are happening, bad things are happening, and it's being pulled in two separate directions, which is causing it to just really not move at all. That's my interpretation. That's how I see it. And that's the best way I can explain it in simple terms. But right now, we don't have an equal amount of positive catalysts as negative catalysts. We have more negatives than positives right now. So those are outweighing what was keeping silver pulled down, which is why I think we're seeing silver start to move up. And not just up, it's moving up pretty quick. Silver's been moving by a lot. Percentage-wise, it seems like every day silver's up 1%, 1.5%, 2%, almost 2.5% today. And again, who knows? Because I'm filming this video at like 10 o'clock in the morning. God only knows where silver's going to be by the end of the day or by the end of the week. Will this continue? Will the momentum continue? Will we keep seeing the numbers climb? I personally would not be a bit surprised. And I know I'm focusing a little bit more on silver right now, when, to be honest with you, I should be focusing more on gold because this is the first time gold has surpassed the $2,000 mark this entire year. It's been actually pretty close to a year, now that I think about it. This is a big jump for gold, even though percentage-wise, silver jumped a little bit more. And we're seeing, if we look at the gold to silver ratio chart, we can see that the gap is closing in. Both metals are moving in an upward direction right now, but guess what? Silver's moving in an upward direction at a faster rate than gold is. So they're both moving up, they're both in the green, they're both in the green almost every single day, so most people don't think that that would cause the gold to silver ratio gap closing in. But picture it like this. Imagine there's a car ahead of you, like miles and miles and miles down the road, like 100 miles down the road. And that car's going 50 miles an hour. Meanwhile, you're going 52, 53, 54 miles an hour. You're eventually going to catch up. Might take a while, but you're eventually going to catch up. Now, I'm not going to sit here and say that silver will catch up to gold and make its way up to the $2,000 mark. I don't know if we'll ever see those numbers. I personally don't think we'll ever see those numbers, but hey, anything's possible. The point I'm trying to make is the car doesn't need to catch up to the other car that's 100 miles ahead of it. But if it gets a little bit closer, that gap closes in. That's what I'm talking about when it comes to the gold to silver ratio. So just a year and a half ago, I remember making a video talking about how the gold to silver ratio gap was 100 to 1. And in that video, I used a 10-ounce silver bar and a 1/10 ounce gold coin. And in the video I said, according to the spot price and according to the gold to silver ratio, this little gold coin right here, which is about the size of a fingernail, and this silver bar right here, which is almost the size of a friggin' smartphone, they're worth about the same when it comes to currency, when it comes to fiat, when it comes to dollar bills, according to the spot price and according to the gold to silver ratio. 10 troy ounces of silver was pretty much equivalent to 1/10 of a troy ounce of gold. But that was a year and a half ago, maybe even longer. Maybe that was 2 years ago at this point. And we have seen the gold to silver ratio gap fluctuate by quite a bit. Right now, it's in the 70s to 1. I think it's about 77 to 1, give or take. So what happens if a couple more weeks go by and this momentum continues? What if silver keeps going up? And what if gold keeps going up as well? But what if silver keeps going up faster than gold is going up? We can very easily see the ratio make its way into the 60s again. 66, 67, 68 to 1 in the next couple of weeks. That could happen. I'm not saying it will. That's not a prediction. I'm just saying what's possible. And we've seen those numbers before. The ratio being in the 60s to 1, that's not foreign. We actually just saw that not too long ago. But what if the momentum continues? What if gold continues to go up? And what if silver continues to go up too, but faster? What happens if we make our way back into the 65 to 1 range? What happens if the gap closes in even more? What if we see 59 to 1, 55 to 1, 52 to 1? These numbers are possible, and these numbers are not foreign. We've seen these numbers before. Now, with how reactive the markets are to everything that goes on in the world, it wouldn't be a bit of a surprise to see silver and gold continue to strengthen. And what I believe the biggest catalyst is right now is the whole Russia and Ukraine thing. I think that is what's really driving up the prices right now. And war, quite literally, is war. It's not one of those things that are just over in the blink of an eye. It's already been a couple of weeks. I'm going to be honest with you. It's probably going to be a couple more months of hearing about this Russia and Ukraine, the battle going on type of thing. This is probably going to last a long time, as wars typically do. But here's the issue with that right there. For all the other markets, horrible news. It'll be a slaughterhouse, especially when partnered up with all of the other catalysts that we have to worry about right now. Inflation potentially continuing to get worse, which Generally, I'm an optimist, and I am optimistic about inflation, but not in the short term. I think it's going to keep climbing. And with oil spiking the way that it is, if oil climbs its way up into the $150 to the $180 range per barrel, we can easily add an additional 2 percentage points to inflation, because that's how much of an impact it would have. And if this upcoming inflation report is at least 8%, then you can pretty much just go ahead and assume, you could bet currency on it, that the following inflation report is more than likely, unfortunately, going to be in the double digits. That's another catalyst as well. Inflation continuing to snowball. And this is for a couple of different reasons. A lot of people like to point at the politicians and be like, oh, it's because you printed a whole bunch of currency. Yes, that's true, but that's only part of it. The supply chain constraints are a huge part of it as well. We don't have nearly the supply that we had a year and a half, 2, 3, 4 years ago. That has gotten slowed down. All the different ports, we're getting less and less. But guess what? Here's my solution to that problem. If I was in charge, I would say to everybody, you know what? We probably wouldn't have supply chain issues if we actually made things here. So I'm hoping this is a little bit of a wake-up call to bring back Made in America. That's what I'm hoping for. That's what I'm praying for. We wouldn't have supply chain issues, especially not to this severity, if we didn't rely on everyone else for everything else. But anyway, not to get sidetracked, that's another catalyst. That's another thing that's adding to inflation. Yeah, they printed the dollar bill into oblivion for the last 2 years. Yes, they overstimulated the economy. Yes, they gave almost everyone stimulus checks, and they gave a bunch of people tax credits, and they pretty much eliminated interest rates. This is all a way of stimulating an economy, which is fine during rocky times, but they didn't stimulate the economy. They overstimulated the economy. They still have billions of dollars worth of pandemic funds that didn't get used. They printed way more than they needed. They over-prepared. They overstimulated. Which leads us to another catalyst that's driving up inflation. Being overstimulated, we have people right now that have had more money than they've ever had in their entire lives. And they're spending more than they've ever spent in their entire lives. They feel richer than they've ever felt in their entire lives because they've been overstimulated and they've gotten used to it. So they just keep buying and buying and buying and buying. And you want to know what that's doing? It's driving up the prices even more because prices go up when demand goes up. When demand goes down, prices go down. Which leads me to what I've been saying for the last couple of weeks. I think the Federal Reserve is going to intentionally send us into an on-paper recession. I think that, at this point, is probably the only hope to get inflation somewhat under control and to get people to spend less. That's the problem right now. We have a consumption-based economy, but right now, people are spending more than what's good because it's driving up the price of everything. So anyway, point being is that inflation isn't exclusively because of currency printing. In fact, currency printing isn't even a bad thing. Printing dollar bills, that's not inherently bad. That's actually typically a good thing if the economy is growing at a rate or at a pace to keep up with that currency printing. The issue is that's not what's happening right now. We are seeing GDP growth. We're not seeing negative GDP growth just yet. But I think an on-paper recession is probably about a year away, maybe less. But we'll see. Time will tell. The reason I'm talking about all of this is because these are all different catalysts that play a role in driving up the price of silver and gold. Real, true, honest money. All these coins, these rounds, these bars right here, all this metal that you see on display, like I said before, they thrive in chaos. Bad news is good news for precious metals, which is why a lot of people have at the very least a small portion of their wealth in precious metals. See, the way it works is that the precious metals, even Warren Buffett says it, arguably the world's greatest investor. He said he's not that big of a fan of gold or silver, talk about the precious metals, because they're an unproductive asset, which is true. But they're not intended to be a productive asset. This is just a way of storing value. This is not an investment. This is just financial protection. This is more of a safety net than anything else. Or a way of having some stability during the rocky times. If you have some low volatility assets in your portfolio, when times get bad and everybody else is seeing crazy volatility, and if you're holding on to low volatility assets, it can give you that sense of stability. But it's not an investment. See, Warren Buffett, he can have that opinion, and I would agree with him. He said he doesn't even like gold, and I completely understand why. It's because he's an investor. He's looking to make money. He's looking to generate wealth, create wealth, build wealth. He's looking for income. That's not what silver and gold are for. Silver and gold are there as a defense mechanism. It's financial protection. It's wealth preservation, not wealth building. That's why so many people, they go and build wealth, and what do after their wealth has been built? They go and take a solid portion of their wealth and they put it into silver and gold to preserve their wealth. It's two different game plans. It's your job versus the bank. Making currency versus saving currency. They're not the same thing. They're not synonymous. They're different things for different reasons, which is why I believe it's best to have a little bit of both. I think you should be investing, but I think you should also be stacking. Vice versa. I don't think you should be all in on one and completely neglecting the other. You can't win the game only playing offense, just like you can't win the game only playing defense. You got to be playing both. Now, you should probably never be playing both 50-50. I think there's a time for offense and a time for defense. When it's the time for offense, that's your time to score. That's when your team has the ball. That's when it's time to move forward. That's when it's time to build points or build wealth. Then when the other team has the ball and it's time to play defense, that's when you gotta preserve your wealth and protect the goal, if that makes sense. Strange analogy, but it's one that I came up with a couple of weeks ago, and I'm running with it because it makes absolutely perfect sense to me. But point being is that the silver and gold are doing fantastic today. That's the focal point of the video, and I wanted to highlight a couple of the reasons why silver and gold are doing so well today. And I'm going to be honest with you. Silver and gold, typically seen as pretty boring because a lot of the time they don't move very quickly. Something that's very slow and steady. The whole slow and steady wins the race thing, most people find boring. I find it boring as well, but guess what? I find boring to be better most of the time. I find boring to be the best a majority of the time. That's why so many investors end up doing better than everyone else if they focus on index funds. Index funds are boring. Silver and gold might be perceived as boring. They're just little pieces of metal at the end of the day. I think they're interesting. I get excited talking about them, but at the end of the day, it's not really a crazy moving asset because it's not intended to be. So they are considered to be kind of boring. But like I said, boring a lot of the time is better. Boring a lot of the time is best. Now, as I always say, as I've been saying for the last 4 years, I prefer when the spot price goes down. I like silver and I like gold a whole lot more on the red days than I do the green days. But during times like these, I'll take what I can get. I'm just happy to see a little bit of movement. I'm happy to see a little bit of momentum. I'm excited to see silver and gold doing numbers right now. It's exciting to see. I would rather silver and gold jump up by 1% or 2% or nearly 2.5% in a day than for me to come on here and click record and be like, oh, the spot price of silver is up 2 cents today, or the spot price of gold is up 87 cents today. To me, that's not movement at all. To me, that's kind of boring. The bad kind of boring. The good kind of boring is when I can get my hands on more of the metal for my currency. Sure, it's an unproductive asset, but that's what it's supposed to be. It's wealth preservation. Anyway, those are my thoughts on everything going on today. I'm excited to see silver jump up a lot today. I'm excited to see gold up over $2,000 an ounce today. I want you guys to head on down to the comments and let me know anything and everything related to this video when it comes to all of the different catalysts that are playing a role in causing everything else to crash. Meanwhile, it's causing silver and gold to get bumped up higher and higher and higher. What are your thoughts on those catalysts? And of course, do you believe this momentum is going to continue? Do you think we may see, I don't know, $27 an ounce silver maybe over the next couple of days or over the next week or so? Do you think we're going to see $2,100 gold over the next couple of days or over the next week or so? Head on down to the comments and let me know. If you guys liked today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. We have the limited edition, luck has nothing to do with it, t-shirt and hoodie, available only until St. Patrick's Day, so get one while you can, and a portion of the proceeds are going to the St. Baldrick's Foundation. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts on silver and gold almost every single day. You can watch all of my videos early and commercial free. Every Saturday morning I post a brand new adventure vlog, and there are a ton of other perks as well. I guarantee you the value exceeds the cost. VIP Club link in the description. And of course, last but certainly not least, make sure to go and get your 5 free stocks by downloading Webull and funding your account. They'll give you 5 free stocks just for doing so. Normally they'll give you 2. Right now they're going to give you 5. So capitalize on that while you can. And if you refer one friend by March 15th, they will give you 10 free stocks for the referral. This is how their advertising budget works. Rather than dumping a whole bunch of cash into commercials and billboards and whatnot, they reward the users for helping them build their app. And if you refer 3 friends by the end of the month, they will give you a spin on the Webull wheel, which guarantees you at least 1 free share of Apple, with the chance of winning 2, 3, 5, 7, maybe even 10 free shares of Apple. Don't pass up on an opportunity. Webull link in the description. Time is running out. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? What are your thoughts on silver and gold on the move? What are your thoughts of the momentum that we're seeing right now? Do you think it will continue? Do you think the catalysts that are likely driving silver and gold up, do you think those are going to get worse? Do you think that that snowball is going to build? And do you think that that is going to have, obviously, a reflection on the silver and gold by driving them up even more? And when it comes to those catalysts, when it comes to the inflation report, which is only 48 hours away, when it comes to inflation in general potentially getting worse months and months and months into the future, when it comes to supply chain constraints, when it comes to the war, when it comes to the tapering coming to an end, and when it comes to rate hikes, how do you think all of that will affect the different markets, which are all, for the most part, crashing right now? And of course, how do you think that they're going to affect the silver and the gold? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.